All right, you're dialed into the monthly recap for this selling call option series. You're here with Chico. And let's first look at the last month of April, April 27th to May 1st, where we actually made some money here. First, we started off with Shopify because we needed a quick trade before some of the earnings was coming out on Monday. And sure enough, after the first day, we sold 2 contracts, strike price 130. Shopify didn't go anywhere, and we bought it back the next day for $1.23 to make 132. And then we went for Starbucks. I thought Starbucks uh, would have a decent quarter at best, but I didn't think it would go that far up where we had enough delta between the present trading price and the next day price would the strike price that it would put us in a loss, but it did. They had a good quarter, and same sales comp was, I think, above 6%, which was quite incredible given the economic conditions. And so I was a little surprised. I'm happy for Starbucks, and quickly we rolled it up because I wanted to make some other trades. So decided to close out that position. So we sold 5 contracts at 67 cents, 105 strike price. The stock was around trading at the high 90s, and then after earnings it went just above 105, and then bought it about $1.70 per contract to take a loss at 550. Then we wrote to Microsoft. Microsoft released earnings. 470 strike price. The stock didn't go anywhere. I think the investors are not impressed with what they have to report in the quarter, so the stock went down a bit. Quickly bought the contracts back out for 2 cents a piece, made $215 there, and then we played with fire on the last day. Western Digital was just surging because of Seagate, and so Seagate reported earnings 2 days before, and 475 strike price. For this very, very pricey stock, which is riding on the AI wave, and we sold it at 620. The stock didn't go anywhere. It went down and kind of almost recovered some of its losses, and we let it go into expiration and pocketed 620. So the week we were up 452, and that helped us recover from some of our previous loss in the previous weeks. And so here in the month of April, we could see the first week we took a loss. Intel and AMD put in the hurt because of the AI wave was just very strong for us, particularly for these CPU makers and GPU makers. And then we made it up the next week, and then we lost it again. I think we went for Intel again, and Intel right before earnings, it took off. So the narrative is AI is really hot, and it's carrying a lot of these certain stocks like sky high. So the month of April here, 7 for 11 trades, so down to 63% for this month, lost 1,302, so down 2.6%. But what's interesting is, despite the 2 losses in the 2 weeks, we had two weeks to help reduce the amount of the loss that we could have incurred. And we kept to our game, and over time, I think, just like in the past, hopefully we ride this out. 2.6%. You can see the worst month here back in June last year, 7.5%, and we had month of April, and what's another one? September, where we're 2% and 2.65%. So not so bad, but obviously we want to make money. It's just been a really hot market, and got hurt with some of the AI boom that just boomed a little bit too hard on us. So before we wrap up here on this video, I want to talk about the Nasdaq has reached the all-time high, and the war hasn't even concluded yet, despite the ceasefire and the record high prices of oil, which is quite interesting. But what is more interesting is this AI boom. There are a lot of winners, and certainly Seagate here. Here's the 1 month chart. This is the 1 month chart, and it's surged after earnings. It just it kept going up and up. Let's see if I guess. Here's the 6 month chart. 6 month chart's up 185%. 5 day here up 24%. And Western Digital, the other large hard drive maker, it here went up after there we go. After earnings here, so it was up here in the middle here, was up following Seagate, and then earnings sent them down in the after hours, but then the next day it basically almost recovered all the pre-market trading, and it's back up to 431. So beyond the scope of this selling call option video, I wonder if these guys have much more upside. I mean, they're crazy expensive stocks. They make hardware, and there's like incredible demand for storage. SanDisk is the other one too, flash storage. But Western Digital and Seagate are mechanical hardware hard drive makers, and there's Toshiba too, which is a smaller player, and I think they're also a little bit behind in their technology. Seagate is the leading. I think they have the slight lead in hard drive technology with density and in size, but Western Digital is not too far behind. And yeah, the market cap for this is 147 for Western Digital, as we in this screen here, and the 162 for Seagate. So they're kind of almost neck and neck, and like I said, they're the only two hard drive makers in the game, other than maybe Toshiba. But let's not consider Toshiba. So I wonder how much more upside these guys have, because you only got two companies supplying basically the world for data centers, and most of the data centers and hyperscalers. So they continue to have a margin expansion and strong revenues, but it isn't like they have strong. They're raising their. It's not like they're raising their outlook like in an insane amount. Companies do have to book what they want, and I think the lead time's like a year now or something like that. If the Western Digital call, so yeah, it's very interesting. I don't know how crazy it can get, but it's pretty crazy as we speak. So the food for thought for you, and don't forget to like the video if you do, and that's it for this video. And so April, yeah, we took a little bit of a hit, but it's only our first hit of the year. We look forward to the next month, which is the month of May, which we're in. All right, that's it for now.